What's up everybody? Welcome to the Stocks channel. My name is Cory, and today in the stock market we did pull back right before closing that gap after we were just going way too far, way too fast, and we were due for a cool down. So far this bull rally is just beginning and it's far from over. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were down 0.93%. And as you can see, we were very close to fully closing that gap just below 402, and we were just getting way too far extended above that upper Bollinger Band, and we were due for a cool down. Now you can see if you look at the volume, it does look like we were falling on increasing volume today, but if you switch this over to a 1 hour chart, you can see a lot of the volume at the end of the day was buying volume, so there is still buyers out there buying the dip. And if you look at the daily chart, we are still above the 50 EMA for the third day in a row. So just keep in mind, if you are getting bearish just because we had one red day, that we are never going anywhere in the stock market in a straight line without any sort of volatility and ups and downs. So just keep in mind, the number one thing you're paying attention to is whether or not SPY is above 390. We're looking for higher lows and higher highs to define the bull trend, and so far we do have the higher low and the higher high. So as long as SPY is above 390, you do need to remember this is still a bull trend. If SPY starts breaking down below 390, that's a completely different story, and we will instantly become more bearish if we lose that support. And if you look at where we closed today, we did not even close back down below the 50 EMA. So just keep in mind, as the week goes on next week, these Bollinger Bands will expand, and it is very likely while we are in the bull trend that we are going to fill this gap to the upside. And I still think the bulls are going to push all the way up there to battle the big bear. If you think of this chart as a battlefield, right now this big bear is in a large battle and he's the general, and he's just sitting in the background sending in the smaller bears to attack the bulls. But the bulls are much stronger and they are going to fully push their way to battle that bear. This trend is strong enough to continue to push higher as long as we're above 390, so just keep that in mind. And all of these moving averages do have a lot of positive momentum. So do not get shaken out of your positions just because we have one red day. That is a very common mistake. Once we do start to reverse a bear trend and head into a bull trend, it is very common to look in the rearview mirror and have that recency bias that we are coming out of a bear trend, and there is just no way the stock market can ever go higher again. So the best way to get rid of that fear is to be objective and use that risk level at SPY 390. And there's really no other way to put it. It is that simple. SPY is either above or below 390, and whether it's above 390 or below 390 should tell you where this market is likely trending. Now, if SPY breaks below 390, I do believe you need to get a lot more risk off, because we could go all the way back down there to close the gap at 379 and possibly even go for that next leg lower at 350. While we're above 390, we're likely going to close the gap above at 401 and likely start trending up to 416 to about 420. So the line in the sand and your risk level is very clearly defined right there at SPY 390. So there's really nothing else to go over on SPY, because we are still above that level and we are still in the higher low and higher high configuration. On the NASDAQ 100 triple Qs, we were down 1.75%. And on the triple Qs, it's the very same story as SPY, where we were just getting way too far above the upper Bollinger Band and due for that cool down period. And if you look at the price action, we did not even close below the 5 EMA, and we are still 4 days back above the 50 EMA, developing that bull trend. All of the moving averages have a positive slope, and we are clearly in a higher low, higher high configuration. So as long as the NASDAQ 100 triple Qs are above 296, you need to stay on this bull, because the bear is waiting all the way up there at 320 and possibly even higher. You can see the volume today was very low, so we did get a low volume selling day. And the last time we had low volume selling was right before we had the strong push higher in this bullish rally. So keep in mind, there's still the possibility while we are getting low volume selling that it is going to be seen as a buying opportunity, as long as we have the bull trend in the short term. So the triple Qs are above all the moving averages with the price action, and we are very close to having that full bull trend, as these moving averages are going to start stacking up to the bull side, which is only going to give the bulls more and more momentum to buy the dip, to run up there and battle the big bear, just waiting to take a bite of the price action in the 320s. Of course, all of that changes if the triple Qs break down below 296. So that is your very well-defined risk level that you need to pay attention to, because while we are above that level, you are bullish, and if we break below that level, you instantly need to get more risk off. In the Dow Jones, we were down 0.42%, and just like the rest of the indices, we are over the 50 EMA and all of the other moving averages for that matter, as we continue to just get way too far extended above that upper Bollinger Band, and we're due for that cool down. We still have the gap to fill at 323, which was nearly filled today, and it is very likely the bulls are going to push off of this support at the 50 EMA right around 317 to 318, push through that gap and run all the way back up to retest the previous daily high at 333. You're getting a lot more risk off in the Dow Jones if we lose the 50 EMA and come back down below the 20 sample moving average. So your critical risk level in the Dow Jones is right around 317 to about 313. If we lose that support zone, look for the gap fill below at 307, but as long as we are above that critical support, you need to stay on the bull. In the small caps IWM ETF, we were down 1.6%. And it's the same story as the rest of the indices, pulling back from the upper Bollinger Band and coming back down to retest support at the 50 EMA, with the price action closing back over all the moving averages. We're starting to get a lot of bullish momentum in all of the indices, and we very clearly have the bull breakout in the small caps, with the breakout 3 days in a row above the resistance trend line and the backtest as support, seeing buyers at the end of the day. Look for that full gap close at 183.5 and then the push to the previous daily high at 191. With your critical support being right around 177 to 175. So as long as we're above that support, you need to stay on the bull in the small caps. On the ARKK ETF, we were down over 5.5% today, and ARKK did lose that support zone after the breakout at 47. So this is a little bit of a gray area of whether or not ARKK is the real deal breakout or just a false breakout. The easiest way to play ARKK is risk off below 47 and risk on above 47. So right now would be a lot more cautious, even though we are above the 50 EMA of support, which is just above 45. Stronger support is down here right around 42 to 44, so you could use that as your risk level as well, but I think it's a lot safer to just wait until we are above 47 before getting bullish. Above 47, we will likely finish out the short squeeze, which could take us all the way back up to about 55, so you're a lot more bullish above 47 and a lot more bearish below 44. On the VIX, we were down about 0.25% with the VIX 3 days in a row below 24. So without a doubt, the VIX below 24 is a bullish development, and it's very likely the VIX is going to trend down towards 20 while it's below 24. If at any point the VIX starts spiking back above 27, you instantly need to get a lot more cautious of the next bear market leg lower. Otherwise, while the VIX is below 24, you need to stay on the bull. On Bitcoin, we're currently down 2% as Bitcoin is struggling to break over that 50 EMA, and we also are getting resistance from that upper Bollinger Band, but those Bollinger Bands will continue to expand, allowing Bitcoin to climb higher. Bitcoin is very simple right now. I think you need to stay bullish while it's above 22,000, because above 22,000, it could be trying to go all the way back up to 30,000. If at any point Bitcoin breaks below 22,000, you need to get risk off because it's likely coming all the way back down to 19,000. While Bitcoin is above 22,000, your critical resistance levels will be right around 23,500, 25,000, and 28,000. As long as we are above 22,000, we have the higher low and the higher high, so stay bullish in Bitcoin while we are above this support level. On NVDA stock, we were down just over 4% today after we did close above the upper Bollinger Band for 2 days in a row, and we're due for that cool down, coming back down to the 50 EMA of support at 173. Above 173, I think you need to stay bullish, but if we lose that support, we could be coming all the way back down to 161 and possibly even closing the gap at 158. So you're getting a lot more risk off in NVIDIA if we break down below this support at 173, and you're getting a lot more bullish if we break out above the previous daily high just above 181. We have resistance above the breakout at 183 and 196, so you're getting a lot more bullish above 181 to 183 for that run to the next resistance at 196. On Tesla stock, we were up 0.2% as Tesla continues to defy gravity. Even after a day the rest of the market was selling off, Tesla closed up 0.2% and outside the upper Bollinger Band. Now I will caution you, Tesla is getting to some critical resistance and getting way too far extended above the upper Bollinger Band, so we are likely due for a retracement in the short term, which means Tesla is very likely coming back down to about 798 or 775. If we lose that support at 775, look for the full gap close at 752 and very strong support right around 740. Keep in mind though, Tesla is going up on very high volume, and I never suggest trying to short something that's getting a bullish breakout after 2 months of consolidation that's seeing buyers on high volume, because it's possible Tesla is trying to run all the way back up to $900 before it sees a pullback. With the Bollinger Bands this tight and trying to expand, it is going to take some time for Tesla to march higher, so I do favor the melt up scenario in Tesla as long as it's above $800. In Apple stock, we were down 0.81% as Apple was also getting very close to that resistance right around 157. And so far, we continue to see Apple building the very strong bull trend, and we nearly have all of the moving averages stacked to the bull side. We just need that 20 simple moving average to cross over the 50 EMA. We have earnings coming up next week, so there's going to be plenty of volatility. But if we do see a good, strong earnings report from Apple, we will very likely get the breakout above 157 and start trending up towards 174. You're staying bullish on Apple as long as it's above 150 and 147, and you can get a lot more cautious if we lose those support zones because the support trend line is all the way down here right around 143. So as long as Apple continues to look bullish with this higher low, higher high, and very bullish configuration, it is very likely the rest of the stock market is going to continue to trend higher as well. On the financial sector, we were down 0.58% as the financial sector got the bullish breakout with the last 2 days of price action and now has the back test of the breakout as support. So the next time we break over the 50 EMA, we will very likely fill the gap above. The industrial sector was down 0.32%, closing back over the 50 EMA for the second day in a row. So we're very close to getting the bullish breakout to fully close the last gap above. But if we do lose support, keep in mind we do have strong support at the positively sloping 20 simple moving average. The healthcare sector was down 0.41% with the price action still closing back above all the moving averages, and we are only one more day away from having the full bull trend with the bullish price action breakout on the close above 131. The energy sector was down 0.82%, coming back down to that support at the 20 simple moving average and so far holding above that level. It's likely from here we are trying to test the 50 EMA as resistance. So while we are above $70, look for a retest of 75. So jumping back over to the S&P 500, as you can tell today we did get the pullback, but it's mostly just a technical pullback because we were getting way too far extended and we are still in the bullish configuration of the higher lows and higher highs. Don't get shaken out of your positions after one red day. You need to set your risk accordingly, and if we break down through the risk level, then you can get risk off. But you will not want to miss the next bull rally just because we're seeing a little bit of volatility. Follow the price action, and as long as SPY is above 390, it is more likely that we're going higher and not lower. Keep in mind that every bull market is born on very bearish sentiment as people totally rule out the possibility that the market could have bottomed and do not want to believe that it's possible the market can go higher. If everybody around you is bearish, it is more than likely that the market will continue to trend higher. And so far, we have a bullish configuration with still very high bearish sentiment and a lot of people doubting this rally can be the real deal. I'm not guaranteeing this is the real deal rally just yet, but so far we can only trade the chart that we currently see, and we still have a bullish configuration with higher lows and higher highs and price action trading above all of our moving averages. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I'm doing intraday updates and analysis and bringing new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.